Okay, cool. Okay, so for this week, we'll walk you through. Again, the thought process is pretty similar. So what I want to do is this week itself, during the weekend, there's no valid signal. Okay, and let me walk you through the report that we have. All right. So far technical analysis, there's no signal. But let me walk you through the fundamental bias for this week itself and what we want to focus on going into the week. Okay, so euro, we are actually neutral, and the reason why we are remaining neutral for euro is that the data from last week is pretty much mixed, and there's no clear indication. All right, so what we need more information as to what the ECB will want to do, because last week the ECB press conference didn't even show any sign as to whether they are hawkish or dovish. Right, so for now we are pretty much neutral, and what we're gonna expect is that euro is kind of like inverse correlation with the dollar. So if dollar weaken, euro have the tendency to strengthen and move the opposite direction. Alright, so if USD weaken, Euro will strengthen, and if USD strengthen, Euro have the tendency to weaken. Right, so what we are looking out for this week is mainly the ripple effect of the US dollar. Okay, pound itself, we are still remaining neutral. Basically, what we want is to keep away from pound. Alright, and for those who are following what's happening in the UK, over the weekend when the vote is being updated, okay, majority of the leave vote is actually currently still leading. That's why you can see that pound opened with a huge sell-off. Okay, price actually went down by a lot because of the UK referendum. Right, the leave vote is currently still leading. Best thing to do right now is to don't touch pound again. Leave pound aside until the referendum is done, which is around the 23rd of June. Okay, so at the until end of this month, basically do not trade any of the pound. In terms of Japanese yen, alright, we are currently slightly bullish because there are two things, alright, two reasons. The first one is retail sales and housing spending from Japan last week is better than the estimates, alright. So this shows that there are certain signs of recovery in the Japan market. The second thing is last week, alright, Japan PM Abe actually make an announcement that he will further delay the sales tax by 2.5 years. Okay, so this drive certain bullish sentiment in the market. That's why you can actually see last week on Tuesday and Wednesday morning, all right, Japanese strengthened. So riding into this week, all right, nothing much changes. So our fundamental is still towards the bullish side for Japanese yen. Okay, dollar very significantly is gonna be bearish for now. Alright, because if you follow last Friday NFP data, right, it came in 38,000. And if you follow back, right, it's actually one of the lowest number released since 2010. And having said that, right, why we are just slightly bearish and not, like bearish itself, because some data is still showing signs that there might be still a chance that Yellen will raise rate. Okay, because average hourly earning came in as expected, all right, and there's also an upward revision from last month. And what we have is unemployment rate fell below 5%, so it came in at 4.9. So overall, there's still some positive note on the dollar. Okay, but everything will be hinging on later on Yellen's speech. Right, it'll be happening at 12:30 a.m. So whatever Yellen say, it will definitely drive the sentiment for the US dollar. Okay, Aussie, we are slightly bullish. Basically, if you look at Aussie, New Zealand, and Canadian, we are overall bullish in all these commodities currency. Is because when dollar is bearish, right? When dollar becomes bearish, the sentiment of dollar is bearish. Money needs to flow somewhere, and capital, when they need to flow to some other currencies, they tend to flow towards higher interest currency, which is the commodities currency, which is over here, right? Aussie, New Zealand, and Canadian. Okay, and if you look into the fundamental of Aussie first, you can see that last week building approval and the GDP came in way better than expected. Right, so GDP is actually one of the more significant data, and it came in better than expected. So this drive a certain positive sentiment towards the Aussie dollar, and this might leave some pressure off the RBA to have another rate cut so soon. Okay, if you look into the events calendar, rate cut will be happening on Tuesday morning. Okay, so high chances because of certain positive note from the economy, RBA might not cut rate this coming meeting. Okay, so if RBA don't cut their interest rate and coupled with Yellen being bearish, okay, we might see a very strong rally on the Aussie dollar. Okay, this week focus is also on New Zealand because what we have later on in this week is RBNZ. Okay, if I pull your attention to over here, you can see that RBNZ is also having their rate statement and their official cash rate. Okay, we are slightly bullish on Kiwi because the GDT price index last week continued to perform, right, coming in better than previous data, and coupled with just now I mentioned the negative data from the US, alright, the NFP, capital will flow in the commodities currency. Alright, out of these three, alright, Aussie, New Zealand, and Canadian, Kiwi itself will be one of the more popular one. Okay, because of fundamentally Kiwi is better off compared to Aussie and Canadian. Alright, but the key focus here is you want to take note on RBNZ rate statement, right? And what RBNZ will Vila, alright, will actually talk about whether is he overall hawkish or dovish, because this then will also shift sentiment when the speech and the press conference is taking place. The last currency we look at is Canadian. Okay, Canadian we are slightly bullish again because of the dollar, the US dollar, alright. But we are not, as bullish as Kiwi because data came in from Canadian is worse than the estimate. Okay, but we do have some positive note from OPEC meetings because there's no agreement to actually cut supply. Alright, then that's why we see price of oil continue to be supported. Right, basically there's no one agreement that state whether the OPEC countries is going to cut or not cut their supply. That's why price of oil continue to be supported, and as long as price of oil is being supported, the Canadian dollar will also continue be supported. Right, but the two key data to watch for Canadian is the unemployment rate and the employment change. Okay, this will give you some hint as to whether this sentiment of the Canadian will change or not. Alright, so overall, if I bring up the economic calendar, right, you can see that the focus is definitely later, right? Fed Yellen is 12:30 a.m. followed by this one, alright, Tuesday afternoon 12:30, which is the Aussie cash rate and Aussie RBA rate statement. Okay, we'll talk more about this on in the evening, alright, tomorrow as well. If you are there at CMC Market, we actually talk about this in more detail tomorrow. Okay, then after that Wednesday, there's not much data to focus on. Basically, pound we are all skipping it. That's why even if it's important data coming in for pound, we are all ignoring it. Alright, Wednesday the key focus will be on Japanese yen. Alright, we have the final GDP, but we expect that this wouldn't move the market much. Alright, so Japanese will still be riding on sentiment move, and we still expect it to be continued slightly bullish. Alright, Thursday the focus will then be on RBNZ. Okay, they are releasing their official cash rate as well as the rate statement, followed by a press conference after that. And Thursday afternoon, 3 p.m., you have ECB ECB President Draghi speaking. This one, if you look into it, right, it's actually not going to be a huge major movement unless Draghi says something funny, right? Other than that, we don't expect it going to be moving the euro much. Okay, and of course, the Friday itself, the focus will be on Canadian. Alright, Canadian unemployment change as well as unemployment rate as well as employment change. Alright, so overall this week is pretty quiet. The key focus is really on the commodity currencies. Alright, so let's jump into the chart and I'll show you why we do not have any technical setups. Alright, so basically what we want to do is we always want to stick to our trading plan. Okay, if there is no setup, we basically don't force a trade. Okay, because the whole idea here is we want to first protect your capital, and after that, if you find any opportunity, only then you start to jump in. Okay, so let's take a look at all the charts, and I'll scan through together with you and walk you through. If there's any new potential setup, I'll also show it to you on the chart itself. Alright, so with the first pair we look at, I normally scan through 28 currency pairs, so I'll just walk you through today as well. Alright, all the 28 currency pairs. If you look at euro dollar, this is the H4 time frame. Okay, this move over here was because of NFP, and you see that it has broken quite a bit of previous high as well. Alright, having said that, we are not going to look for any setup as of now, simply because later today, 12:30 a.m., Yellen is gonna speak, and that is gonna change the entire sentiment. If she is hawkish, alright, she still say that there might be a potential rate hike in June or July. Okay, it can make a total U-turn for this. Dollar will continue strengthen and it come all the way back down. So as of now, what we want to simply do is to wait for Yellen to make her speech. So after she has spoken, right, then direction becomes clearer, and that's where we want to start to look and trade. As of now, there's no setup, alright, but the key level that you want to focus on will be around the 1.1218. Okay, so depending on what's going to happen, you can see that this is a major resistance last time. That now price has broken, it turned into a support over here as well, a support level. Okay, but as of now, don't trade it. All right, just simply monitor. Just skip pound because we are not looking at pound. If you look at dollar yen, again H4, there's not much you can trade. All right, this kind of chart is pretty ugly. You can see a huge drop over here. All right, a huge drop, and then it starts going up, and then suddenly a huge drop again. Okay, so this kind of chart is what I call very ugly. First, there's no clear trend. Second is because there's a huge movement up and down. Okay, there won't be any potential patterns for you to trade as well. So in terms of all this kind of setup, basically if you look at a chart and it looks something like this, it's very ugly. There's no technical setup. Alright, in terms of Aussie dollar, this is pretty interesting, right? Because this one I didn't have the time to send out the signal last week. Okay, but basically what we traded on our own account is we traded the breakout strategy. Alright, when price break out above here. So if I show it to you how we entered. Okay, we entered around, okay, let me delete that. We entered around this level, which is at the 173.01. Alright, so we entered around that level because of this breakout. This was pretty on the spot we entered is because of the negative NFP data. Okay, so because of that, we didn't have time to actually send out the signal because of purely trading on the news itself. Okay, so I'm not saying that you guys should start doing that, but eventually, if you are being more familiar with the market, alright, you can start applying all the strategies on the spot. Okay, so this is a missed opportunity. So for now, do not enter first. Again, because this is regarding dollar, you want to wait for Yellen to make her speech before you decide what you want to do about it. Okay. Kiwi dollar, very similar. Alright, if you are watching during the NFP, you can see that there's a huge breakout here, but we didn't trade this. We only managed to capture on Aussie dollar. Okay, again, wait for Yellen to make a move. Okay, all the dollar pair basically, if you look at it, there's not much other than dollar Canadian. Alright, so if I pull in what we see over here, right, dollar Canadian, we can see that it's a huge ranging environment. So there's this low, there's this high, but price is not able to break above this high and haven't broken this low. So basically what it's doing is currently ranging. Alright, so when price is ranging, we decide to see if there's any pattern, right? We adopt the pattern methodology, the pattern strategy. So what I did is I started to see if there's any M on W pattern, right? And we see that there's a potential M size forming, M shape forming. Okay, and I start to pull in my Fibonacci, and I can see that this retracement comes in at the 61.8. Okay, so 61.8, we have a potential Gartley pattern. And potential Gartley, what we do is we use the extension and we want to find the 127 extension level, which is around here. Alright, so this is the 127. If I delete this other one, what we are seeing is a potential Gartley pattern that looks like this. Alright, but again, if you are looking at this pair, right, because of dollar and Canadian, if you look at the fundamental bias, if I bring it back up, okay, if you look at dollar and Canadian, dollar we are slightly bearish, Canadian we are slightly bullish. Okay, so if you are trading that particular pair with that pattern, basically if you are buying this, right, this is a bullish pattern. If you're buying this pattern, you're actually buying dollar and selling Canadian. So if I pull that up, right, this one, the fundamental bias, if you are buying dollar and selling Canadian, you are going against the fundamental bias, right? So if you are trading this trade, this pattern, you are considered taking a counter trend according to fundamental. All right. So what we want to recommend is suggest you not to do that. Okay. What you want to do is you want to find trade setup that is aligned with the fundamental itself. Right, but you never know what Yellen is going to say. So what we want to do is you simply put this potential setup like this, and we monitor it. So when Yellen come out later at 12:30 and she say that, oh, there's still a potential rate hike, okay, price can really do something like this. Price can spike down, and after she say that, oh, there's still a potential rate hike, it's not too bad, and then in terms of dollar, then you might see another rally. Okay, so what we want to wait for is wait if what Yellen is gonna say. Okay, depending on how or what she's gonna say, it might change the sentiment from dollar from negative to a bullish one. Okay, so we just keep this as a potential setup, but we don't key in our pending order first. Okay, the next pair, if we go into Euro Yen, okay, this is a little bit interesting because if you look at this, right, this low has been broken, and we see that, you know, from high it forms a low, it forms a lower high, and now it has broken the previous low as well. Okay, so if I start to put in my Fibonacci from this high to the recent low, okay, we do see some confluence coming in at the 50% Fibonacci level as well as the previous structure level. You can see it tests 1, 2, 3, it go back up, and eventually it break down. Okay, so this is a potential setup to short the Euro Yen. Okay, and if you look into the fundamental bias, alright, we see Euro is neutral. Okay, but we understand that the ripple effect of dollar, we're gonna shake it, and we know that Japanese yen is slightly bullish. Okay, so this one overall is potential setup, alright, going together with the fundamental bias. Right, so what we want to do, right, because of later we have Yellen speaking, once again we don't key in the pending first, but what you want to do is you monitor this level. And if Yellen come in and say something, you know, bullish about the dollar, then selling Euro Yen might be a good move. Okay, so this one again, the level you want to identify and keep an eye on, alright, is at the 122.5. But again, don't put in your pending order first because later on, we never know what she's gonna say. Okay, so just keep an eye on this. Okay, later on I'll screenshot all the potential setup, alright, and then I'll send it to you guys as well. But it's good to also practice on your com, alright, on your own chart and see if you can identify all these setups as well. Okay, you're gonna skip pound yen, we're gonna look at Aussie yen. Okay, if you look at Aussie yen, basically what it's doing over here is ranging, right, up and down, up and down. And when it's ranging, you want to start and see if there's any potential pattern. Okay, right now over here, if you look, focus on this area, there isn't any potential pattern. Okay, so what we want to do now is just simply wait and watch, alright? Wait for price to develop and see if there's any potential setups that we can take. But as of now, there's nothing, so you just leave it there. Okay, Canadian yen, again, very similar to Aussie. What you see is price is currently Price is currently in a consolidation, alright? It has a low bounce up, you can come back down, bounce up, and then come back down. There's not much happening. Alright, so what you just need to do is, seems like NZD is hawkish, okay? That's another trader that we have, alright, Marcus. So not bad. He's also identifying that the fundamental of New Zealand is hawkish. Alright, so let's get back to Canadian yen, alright? So you see that there's nothing much moving over here. Okay, so again, very similar to Aussie yen, we just adopt the wait and watch approach, alright, until there is a technical setup that gives us an alignment together with the fundamental. Okay, Kiwi yen, alright, this is slightly more interesting because what we are seeing is that it's actually consolidating, but we do see a slight movement going up, right? Not very obvious, but it's inching upwards bit by bit, right? And if you really want to look for a trade, there is some potential one playing out, okay, but it's not ideal, so I won't trade it. But if you want, you can look out for it. You can see that there is a potential pattern, okay, from this leg to this leg, alright. This retracement comes in just at the 786, okay, 786 Fibonacci retracement. But of course, this one really depends on, you know, your broker, because this is really like difference of 1 pip, okay, whether it touch or doesn't. If it touch, alright, or if it's so close, like maybe 1 pip or 2 pip, alright, I will take it as it touched 786 and we have a potential butterfly pattern. Alright. But of course, this butterfly pattern is still very immature because it's still very far off from where the entry point is. Okay, but once again, adopt a wait and watch for this pattern. Okay, the reason is very simple, because later on, we do have RBNZ coming in, alright, RBNZ on, let me pull up that again. Alright, we have RBNZ cash rate as well as the rate statement coming in. So this one you want to take note of if you are watching out. Alright, the level to look out for in this pattern is at the 72.70 level. Alright, Euro Pound will skip. Looking at Euro Kiwi, there's not much which you can trade over here, because what I'm seeing here is that though it's going down, it's not giving us a very nice kind of structure level such as the end or this kind of shape. Okay, it's not giving us a very nice structure level. Alright, so what I like to do is, if I cannot spot any clear indication or clear setup from the market, I tend to just protect my capital, alright, and not trade it. Euro odd, this is another interesting one, because what you see, right, is price is currently consolidating between this very range itself. Okay, and since it's consolidating, again, you adopt the pattern strategy. Alright, we do see something happening over here. H1 is actually clearer. Okay, what I'm seeing is there is a potential M pattern forming. Okay, this M pattern. And if I start to pull in my fib, I do see that there is a valid pattern. Alright, you can see that price comes in, alright, this retracement comes in close to 618, alright, but never touch it. Again, it's very close depending on your broker, alright. It's just a difference of a few pips. Okay, your broker might have touched the 618 or not touch the 618. Okay, so for me, this one, price never touched 618. What I'll do is very different from the butterfly. I'll actually take this as a bad pattern because it never touched 61.8. I'll take it as a bad pattern, and I only look for a completion at the 88.6. Okay, why I decided to be, this one I've decided to be more lenient and take the 50% retracement, right, is because a bad pattern gives me a better risk to reward ratio as compared to a Gartley. Okay, so that's the very reason why I want to take bad pattern instead of Gartley, because bad pattern has a higher risk to reward ratio. Okay, this is a bullish bet. So if price comes down to this level and I buy into it, I'm actually buying Euro and selling Aussie. Okay, so at this moment, if once again you check back to your fundamental bias, right, Euro is neutral. Okay, movement will be really from the ripple effect of USD. Aussie, we are slightly bullish. Okay, so once again, if you decide to trade this, you are actually selling Aussie, so you are going against the fundamental Aussie. So this one, the best part to do is do not trade it as for now. Okay, until RBA rate statement comes in, we make an assessment of whether overall Aussie is still bullish or bearish. Then we can trade it. Alright, so again, similar to most of the pairs, just keep an eye on it. Wait and watch until we have a clearer indication and direction as to where this pair is gonna go. Okay, I'm gonna skip the pound pairs and then looking at Aussie Canadian. Right, very similar to most of the pairs that we went through, right? You can see that it's also in a range environment. It's testing the higher boundary of the range. Okay, again, if you look at technical, there is no setup. Alright, so again, simple approach, wait and watch until there is a very clear setup for us to trade it. Alright, wait and watch. What we are watching over here is we have a potential 2618. Alright, we see a divergence happening, alright, but it hasn't complete because the neckline is over here, alright, and what we want is wait for price to actually break it first. So what you need to do is price needs to break this neckline, and then we see for a retracement of 618, and that's where we enter, expecting this to continue further. Okay, so for now, this pair, Aussie Canadian, simply just adopt the wait and watch approach. Okay, we do have a divergence, but we haven't have a confirmation that this divergence has completed. Wait until price break that previous neckline. Alright, pound chef, I will skip it. The commodities pair, I will also skip it. Okay, so let me go over to the next portfolio to walk you through the remaining of the pairs that we have. Okay, this is dollar franc. Okay, you see that this drop again was due to NFP. Okay, and it's still currently facing some downward pressure until Yellen starts to speak. Again, there's nothing much for this that you can trade off. There's no setup. What we want to do is also again wait for Yellen to make her speech to give us more confirmation. Alright, Euro franc, I don't personally like to trade this particular pair. Right, and if you realize, I never really send out signals that deal with Euro franc. The reason is very simple because last time Euro franc is being pegged right towards a level, and that level is kind of being protected until franc actually unpack it from the euro. Okay, so until then, from then until now, I feel that this pair is not the best ideal currency pair to trade with. It doesn't give you a very clear way of trading it because you can see price move in a very tight range. Okay, if you look at this from the top to the bottom, it's actually only about 100 pips. Right, so it doesn't provide me with much opportunity in terms of euro franc. That's why I normally don't trade this particular currency pair. Okay, it's again up to you whether you want to do it, but for me, I don't really trade the euro franc. Canadian franc, what you are seeing over here is, okay, this is a huge range, right? I wouldn't really say that this is what is happening, but I might simply see, okay, this is ranging, okay, and I want to see if there's any potential pattern forming. Okay, if you only focus on this area, definitely there's no pattern, and of course, if you start to look from this point to starting from this point towards the right side of the chart as a whole, okay, you might see some pattern forming. Okay, you can see that we have a potential cipher which looks something like this. Alright, so for those who are not familiar with the criteria for cipher pattern, okay, let me walk you through, then it becomes clearer. Okay, so once you identify like a mountain top, alright, it's actually a potential cipher pattern. So this is some of the quick way you can have in terms of visual guidance. Okay, if you have a mountain top, you might have a potential cipher. The first criteria to have for cipher is that from this leg, alright, this point to this point, the retracement must come in at least 38.2, okay, at least 38.2, but never exceed your 61.8. So you can see this one comes in at 50% Fibonacci retracement. So this is a valid point. Okay, the second criteria for cipher is that the extension of this point to this point, alright, these 2 point, again, similar point, but now you are measuring extension. Okay, the extension must come in minimum 127 to 141 extension. So what you see over here, this price comes in up to the 127 extension, so it is a valid point. So you have your X here, A, B, and C. So once you establish this, the last one is to identify your D point for your pattern, and you want to see where it completes. Alright, so cipher pattern is you pull from here, your X point, all the way to the topmost point, which is your C point. Okay, the completion level is at the 786. Okay, so if I draw in the triangles, your cipher pattern looks like this. Okay, it completes here. Okay, the level to watch is at the 0.7474. Okay, so this is Canadian franc. So if you are looking at buying this pattern, this is a bullish pattern. Alright, again, you go back to the fundamental. You can see that Canadian is slightly bullish. Alright, so we are actually going together with the fundamental if you decide to buy on this pair. Okay, so actually this one, with the recent development, we can actually look to enter this trade should price comes back down. Okay, so overall, if you look at this, this horizontal line that I highlighted do provide some very nice previous support level as well. Alright, so I might send out this as a signal. Okay, I will just I'll key it in now, and then you guys can see where is the entry and such. Okay, so entry level will be at the completion of the pattern. Okay, let me pull in my tool, text tool. Okay, my entry will be at this 786 Fibonacci, which is the level of 7474. Alright, so for me, right, I normally don't like numbers like this, 7474. So I like to use 0 or 5. Okay, so I'll actually use round it down. So my entry will be at a better price, 7470. Okay, so my entry will be at this. So my stop loss will be at the previous low, which is this point, alright? And if you look at price, it's at 7419. So if I round up, alright, to make it a nice number, is at 7420. Okay, and if I look at this, this is H4 time frame, 7420. I would want to give a buffer of 25 pips, and then I'm gonna minus it. Alright, so my stop loss will be at 0.740 minus away 25, so it's 7375. Okay, this will be my stop loss. So take profit. For those who still remember, what I do is Fibonacci from the highest point to where we enter. Okay, the first TP is 382 Fibonacci. The second TP is at 618 Fibonacci. Okay, so TP1, I'll just put it over here. Okay, TP1 at 0. Okay, you look at this, right, is 75499. If I round it up, it'll be at 755. So I'll just put it at 0.755. Okay, TP1. Okay, so for TP2, okay, 61.8 retracement will be at 75966. So I'll actually make it into a nice number. So my TP2 will be at 0.7595. Alright. So this is how I'm gonna key in my entry. Alright, later I'll send it out as a signal. The whole idea here, right, for cipher pattern, I would like to bring your attention is that the risk to reward for cipher pattern is actually not very high. Alright, your TP1 towards where your stop loss is usually a risk to reward ratio of 1:1. Alright, it's not going to be a very high risk to reward for your TP1. So this is just the nature of cipher pattern, right? So just so that you know. But if sometimes you get a risk to reward ratio, alright, for cipher, you get a risk to reward ratio of less than 1:1, then you might want to skip that trade. Right, so as part of risk and trade management, you only want to take trades which have a minimum risk to reward of 1:1. Okay, so this one I will send it out a signal later. If you look at next pair, Aussie franc, alright, H4 time frame again. What you are looking over here is that you can see that price is currently in a range environment. Okay, and what you want to do is, right, if I drop it down to H4 time frame, it becomes clearer. What I'm seeing is there's a potential W formation. Okay, so again, I repeat, range environment, you want to start looking out for patterns, alright, to trade it. And what we see is there's a potential W pattern on this pair. And we start to put in our Fibonacci tool from this high to the recent low. Okay, let me be more accurate. Okay, we see that price comes in close to 618 again, but never touch it. So it is a potential bad pattern. Okay, so this is actually a potential bad pattern. And the bad pattern completes at the 88.6. Alright, so if I drop a horizontal line, this is how it looks like on a higher time frame as well. So you can see that we have some very nice level over here. Okay, and over here acting as a resistance. Okay, so again, if you look at this pair, Aussie franc, you go back to your fundamental bias, alright? Currently, Aussie, we are slightly bullish, but later on tomorrow in the afternoon, 12:30, okay, we have the cash rate as well as RBA rate statement. So when we have all these major risk event coming in, right? We might not want to put in our pending orders, but simply adopt the wait and watch. Now that you know that you are eyeing this level, alright, basically your alert is that if price comes up to this is where I'm going to be interested to look out for potential entry. What you want to do is, if you are able to access your computer or access to your chart tomorrow after RBA rate statement, then you might be able to spot a entry. But for now, because of major event that's coming up, do not put in your pending orders. Okay, so why for CatChef I'm okay with doing that is because we do not have huge major news coming in, but Aussie franc, Kiwi, we have major news coming in this week, so that's why I'm not comfortable with putting in pending orders. Okay, so similar, if you look at New Zealand franc, H4 time frame, what price is doing is actually ranging huge in this entire environment. We do see some slight uptrend over here, okay, but it's not very obvious because it's slowly inching up, and then we have a previous high over here that hasn't been broken. Okay, but what if you zoom down to H1, you actually can see a potential pattern, if I'm not wrong. Okay, what you see over here is that you have a mountain top kind of pattern. Okay, when you see mountain top kind of pattern, it's a potential cipher pattern. And what you need to do is you then start to put in your Fibonacci tool. Okay, from the previous low, I'm using the fractal, the daily fractal, to guide me to the recent high. You see that this retracement comes in at 50%. Okay, so 50% is valid for a potential cipher. But what I want to do is I want to make sure that my extension, alright, Fibonacci is also valid. So you can see it touched the 127. Okay, so this is a potential cipher pattern that is valid. So what I do is I pull from my X leg to my C point. Okay, and what I'm interested at is at the 786 level. Okay, so this is how this cipher pattern is going to look like. Alright, so if I zoom it back to H4, this is how the cipher pattern looks like. Okay, this is New Zealand franc. If you look at the fundamental for this week, alright, New Zealand is bullish. So if you look at this pair, this is a bullish setup, bullish cipher. Buying into this, basically you are buying into Kiwi, buying into New Zealand. it's according to the fundamental bias. Right, so it's a good thing, right? Because your technical setup is aligned with the fundamental. The only key thing that you want to take note of is on Thursday. All right, is on Thursday. We do have 5 a.m. in the morning. We do have RBNZ rate statement as well as the official cash rate. All right, so previously, RBNZ cut their interest rate, so we never know what's going to happen for this coming one. Okay, but my best estimate is that they are not going to cut rate. So if they're not going to cut rate, then your fundamental of New Zealand is going to maintain as bullish. All right, and you can then set up this pair. But once again, because of the huge major news, right, basically when they deal with interest rate decision kind of risk event, you do not want to put any pending order as of now. So what you want to do again, this one, you just want to wait for Thursday and see what RBNZ decision is gonna be. Okay, but if they decide not to cut rate, then you might want to key in this order as part of your trade. All right, so just keep an eye on this. Aussie Kiwi. Okay, on H4, what you are seeing is that price actually broke the previous low over here. All right, and it's now retraced. So basically, we have missed this opportunity. All right, because this whole segment happened only this morning. All right, so during the weekend, this haven't happened yet, and I didn't manage to analyze this. So as of now, all right, we actually missed this opportunity if I'm not wrong. Right over here. Oh, okay. Actually, if you are still keen, all right, you can actually still enter around the 50% retrace 50% Fibonacci retracement level, right? Because we are looking at a zone over here, right, and not just a level. Having said that, this is Aussie Kiwi. So what you want to do is take note of the major risk event. Okay, later on we have RBA. Following after that on Thursday morning we have RBNZ. So again, you have two huge news for this particular pair. Best is again wait for the news to come out before you trade it. Alright, but what you want to do is keep an eye on this region. Alright, because we do have technical setup. But technical setup alone, right, if I like to emphasize again, is not sufficient for you to make a trade. Because what you want to do is you want to have technical plus fundamental plus sentiment align all together. Okay, let's look at franc Japanese yen, right, on H4. Basically what we have over here is price is currently what you're seeing, right, is price is going down. So we do see a very nice trend, all right, in terms of technical. We have a potential 1, 2, 3, 4 setup. And what we do is we start to put in Fibonacci. Okay, and we see that this level comes in around the 50%. Right, if I clear off the chart to be clearer. Okay, is this region between 382 and 50. Okay, for me, right, I usually don't take 38.2 retracement as my entry. I like to instead focus on 50% or even 618 because of my risk to reward ratio. Okay, if I take 38.2, my risk will be above 618, my reward at this previous low. You can see that the risk to reward is just about 1:1. But if I take higher Fibonacci retracement, my risk to reward ratio actually start to increase. Alright, so for those who are interested, this is also a valid setup. Alright, so let me just show you, key in this as well. Okay, my entry EP will be at the 50, which is 110.6. Okay, my SL, okay, since I enter at the 50%, my SL will be above the 61.8. Okay, so my SL will be at 61.8. Fibonacci is at 111.007, so I'll use it as 111.00. And because this is a H4, I'm going to add about 25 pip buffer. It will be at 111.25. Alright, TP1. will be at the previous low, which is 108.88. So in this case, right, I'll actually round up a little bit so that I want to ensure that my TP will eventually get filled. So what I'd like to do is I'll put in my TP1 at 108.9. Alright, I'll actually increase it a little bit to fit a new whole number and ensure that my TP get filled. Alright, so for TP2, okay, how am I going to do it is, let me remove this. TP2, I'm going to use an extension, alright, from the low to the high, and I'm going to aim for the 127 extension, alright, right over here. The price level for 127 Fibonacci extension is at 107.948. So I'm going to round up a little bit. So my TP2 will be at 107.95. Alright. So if I clear this. Okay, so this is how I'm gonna key in this trade, and I'll send it out a signal later to you guys as well, right? I do a screenshot on all these trades as well. So the next pair, let's take a look at Euro Canadian on a higher time frame. Okay, what it's doing over here, it's basically ranging, and because of this range, we do not see any potential pattern. Ranging, we look for pattern methodology, pattern strategy. There's no valid pattern as of now. So again, if there's nothing technical wise, there's no setup, we just adopt a wait and watch approach, okay? New Zealand Canadian, alright, we do have some interesting setup over here. Overall on H4 is still not very clear that it's going higher, okay, because this break from the previous high is not significant, alright, it's still very shallow break. So what we want to do is we want to wait for it to break higher first. Alright, then only we have a very clear 1, 2, 3, 4. Okay, as of now, this break is very shallow, it's very small. We do not want to trade it as of now. Okay, so this again, there's no setup, you just wait and watch. Okay, Pound Canadian, we'll skip it, and then the rest of it, we'll actually skip it as well. For indexes, we'll actually skip it. Alright, so we have went through the entire portfolio. So this is generally the top process. And you can see that I actually spent about, for this sharing, because I went through in depth, I went through with you my top process. I spent about an hour to actually go through that. Okay, but for you, if you start to practice and you get very familiar with doing it, right, you are very familiar with the whole process, you actually can go through the entire market in about 20 to 30 minutes. Right, but of course you need to practice a lot to actually reach that. Okay, so having said that, do you guys have any question? Alright, so let me pull out and see if you have any questions that you'd like to clarify. Okay, so I think Jess also asked me earlier today that if there is any signal. Alright, I think Chuan has also asked me if there's any signal. For us, right, we are not going to force any trade if there's no valid signal. That means we don't trade simply because we want to trade. Okay, what we want to do as trader is always to first manage our risks, right? Manage our money properly, and when we only when we identify a very good setup, all right, when there's a valid trade according to our plan, then only we enter the trade. Okay, other than that, we don't trade it. Meaning, if there's no technical setup, the fundamental doesn't align with the technical, the sentiment doesn't align, we don't trade it. We basically just skip and then wait it. Okay, to answer Jess' question first, alright, regarding our FX book, the account that we trade, okay, we focus a lot on risk management first. So we don't take all trades, alright. So give you an example. Okay, for example, right, if we identify a setup, okay, this is not a good example. How do I put it? Okay, I don't have an example to share with you, Jess. But let me explain to you in words, right? So basically, for the difference between our signal and the trading account, okay, how we filter out trades, or we don't take as as if all the trades, right, is that, for example, if you have a very closely correlated pair, example, Aussie dollar, Kiwi dollar. Alright, so all of you should know that Aussie dollar and Kiwi dollar very close related. Okay, so for our signals, when we send out and we track our signals, right, we actually track them in full position. That means if we risk 2% per trade, that 2 trades, we're gonna track it as 2% each. Okay, but for our own trading account, because we focus a lot on managing risks, we want to lower our drawdown. Okay, we actually split that 2 trade into half risk, half risk. Meaning initially, if you risk 2% per trade, now we're gonna break it down into trading just 1% risk on Aussie dollar and 1% risk on New Zealand dollar. Okay, so because of that, right, if we lose less, but if we win, we're gonna win less as well. Okay, so the other example that I can give you is, for example, if you have a lot of yen set up, okay, you have dollar yen sell, you have Aussie yen sell, you have Canadian yen sell, you have Euro yen sell. Okay, so you have 4 yen pairs of sell trade. For signal, we're gonna track it as if it's 2% each. So we are risking 8% in total for these 4 trades. But for our own trading account, what we're gonna do is we're gonna filter it in such a way that we're gonna drop our risk for each of these trade into 1%, 1%, 1%, 1%. So we're gonna halve our entire risk. So again, because of that, the performance will be very different because our risk is less, our gain will also be less. Okay, so I guess that's the difference of how we actually manage our trade very closely. Okay, that's how we actually filter off and manage our risk. The second part that is different, right, is that we are very active in shifting our stop loss for our own account. Basically, if I show you an example, okay, let me show you the example of Australian dollar. Okay, Aussie dollar, right? We entered this on the breakout strategy. So for signals, we don't shift our stop loss to break even. Okay, I repeat, for signals, we do not shift our stop loss to break even until TP1 is hit. Alright, but when we manage our own account and when we manage the trades that we are trading manually ourselves, right? What we want to do is we want to minimize our risk exposure as soon as we can do it. Right? So what we do is, as long as price move in favor by at least a 1-to-1 ratio, so meaning if we risk 1% and the trade move in our favor by 1%, we will actually start to shift our stop loss to break even already. Okay, and because of that, the trade management approach is very different from the signals. That's why you have also very different performance between the signals as well as our own account. Okay, so I hope that explain and answer your questions to how we actually choose our trade. We don't really choose the trade, but it's the management technique that we apply is very different. Alright, and of course, the whole idea is why we are managing it like this is because my approach is very conservative. I always look at my risk before I talk about profit. So instead of talking, oh, what is the opportunity I can make money, I'll first look at, is this a good risk that I want to take? Okay, so for example, just now we share with you the setups, all right, for example, like Euro Yen and all this, when there's a major news event for our own trading account, we tend to be very conservative, meaning we always want to wait for the news to come out first, then we reassess it. Okay, but some of the signals that we send out, we are slightly more aggressive. That's why you see the performance is also very different. Okay, so let me know if my explanation is not clear to you. Then I'll explain to you better. All right, either through email or I can drop you a more extensive email to tell you the difference. Okay, for John question, going through Aussie Kiwi 1 2 3 4 again. Okay, let me bring you up that chart. Okay, this one, Okay, so how you look at this, right? How I analyze this is overall, you can see that there is a direction moving downwards, all right, on this technical chart. Okay, for our time frame, you can see that overall is moving downwards, and the 1, 2, 3, 4 over here, you can see that. Okay, let me bring a focus. Okay, there's quite a bit of daily fractal. You have one daily fractal here, one at the bottom, right? This high as well as this low and this high. Okay, so there are many ways you can start to see how the flow of market is going down. All right, you have this one. Okay, because this high and then it comes down and then it forms a new high. What I do is I'll use that new high instead, because this new high is actually higher than the previous one. Okay, so I'm going to use this, and the next one it forms a new low. Okay, so what you see is you have high, low, lower high, lower low, lower high, and lower low. Okay, so what you see is currently is experiencing a downtrend. Okay, my 1, 2, 3, 4, I can literally take from 1, 2, 3, 4. Okay, that means I repeat that 1 point, 2 point, 3 point, 4 point, or I can take 1 point, 2 point, 3 point, 4 point. Okay, it doesn't matter because my second point is always here. This is always my second point. If I take 1, 2, 3, 4, my 2 is here. If I take 1, 2, 3, 4, my 2 is also here. Okay. What I'm saying is that your first point is not very crucial. Alright, that means your point 1 is not very crucial, but it's actually your point 2, 3, and 4 that is crucial. Why? Because your point 2 is where you want to have a confluence with Fibonacci. Okay, this is point 2. You want to have a Fibonacci level around that. Your point 3 and 4 is important because that is where you use to pull your Fibonacci. Right? So for example, in this case, this is 3 to this is 4. So this is the 2 points that is important because that's where you use to pull your Fibonacci. Okay, to be more exact. And why point 2 is important? Because point 2 is where you're going to select your Fibonacci retracement. Okay, for this case, right, it's in between 382 and 50. But for me, I usually don't like to use a 38.2 retracement because of risk to reward ratio. Right? So high tendency is I always stick to minimum 50% retracement. Okay. So John, did I answer that question? Okay. Do you guys have any other questions? Okay, how many of you actually started to link your account to MyFXBook? The thing is, you need to start linking it, and through that linkage, then I can assess whether you are putting in proper risk management to your trading, right? And I also can see the trades that you take. Do they make sense? That means when you take a trade, is there a valid trade setup, or you are just taking it based on you just feel like trading? So with that, right, when you link your account to MyFXBook, right, we can do a very in-depth analysis of what went wrong, which area you can actually improve on for your trading. Okay, because if you don't do that, you're actually losing out on a lot of data that is being tracked. That means you won't have past data, you won't be able to do an evaluation, you won't be able to do an improvement and see which area you can actually start to work on. Okay, so it's very important to do that. Okay, I've looked through all your trading plan, alright, all of them are good. Okay, all of them are okay to go. The important thing is you must follow your trade plan. So don't just do your trade plan and then chuck it somewhere else. Then it becomes useless. So what you want to do is use your trade plan, follow that. Alright. And of course, when you start trading, you don't follow it. And then next time when we do an evaluation of your performance, okay, we take down your MyFXBook track record, right? And then we match it to your trading plan. You can then see which are the areas that you never follow. Okay, so from there we can actually help you to improve as well. Okay, if not, right, again tomorrow you'll be having a CMC sharing at 7 p.m. Okay, we'll go through and share with the audience and participants regarding the US Yellen speech as well as the RBA rate statement. So if you are able to join tomorrow, okay, it's free. So just feel free to join us at CMC market 7 p.m. Okay, for those who want to perhaps meet earlier, for maybe dinner and such, right? Do let me know. We can meet at Raffles Place around 5:30, alright, for early dinner, and then we can also chat a little bit. If you have any questions, you can ask me during then as well. Okay, so just text me if you want to join in for dinner at around 5:30 at Raffles Place. Okay, so if there's not much, we'll end this webinar. All right, I'll send you out the signals together with the screenshots to you guys, and then I'll upload this video on YouTube. All right, all good, huh? Okay, I'll see you for those who are joining. Then I'll see you tomorrow. Okay, the rest again, if you have any question, do ask me on either email me or you can WhatsApp me. Alright, for Jess, Z, and John, I'll answer your questions regarding the signal later on today as well. Alright, I think I missed that part on answering you guys regarding that. Alright, so I'll see you guys, and again, always follow the plan and trade according to your risk management. Okay, then I'll see you next week.